Brock Moseley. Let's talk about some of your favorite ETFs over at Miracle Mile Advisors. And the first one is the iShares S&P 500 Value ETF. The ticker is IVE. Now, value has really started beating growth over the past month. Can it keep it up?
We think it can. Obviously, growth has been the place to be for the last several years. They've been counting value out. Just recently, you're starting to see the slight outperformance. We like the fact that some of these names are beaten up. It is about valuation. At some point, valuation is going to matter. You got a 2.5% dividend. If you're stuck in a trading range, you want to be in value names, and we like IVE.
All right, well, the next one you like is the EFAV. Now, this is the iShares EAFE Minimum Volatility ETF. So it owns a lot of big foreign names, both in Asia and in Europe. Tell me why you like this one. Does it have to do with that strong dollar? Because they're exporting a lot more, these big foreign companies.
You know, the truth of the matter is the dollar was one of the primary motivations to be in the international markets, to have diversification. You saw a strong dollar. Obviously, exports are cheaper. At this point, though, when you watch and see kind of how EFA has been performing, it's up this year with, or EFAV is performing versus EFA. It's up this year. EFA is down. It was up 7% last year with EFA down. So we actually think that, you know, just some of the weightings in the EFAV versus the traditional EFA weightings, they're you know, underweighting some of the sectors that we want to be underweight, and they're overweighting some of the sectors we really, really like. So that's why we like it.
All right. Well, sticking with minimum volatility, you also like that for emerging markets. So you like the EEMV. Now, is this a replacement for the EEM, which is traditionally the most popular emerging markets ETF?
It is. It's about weightings. You know, it's not really a valuation play. I mean, emerging markets can get cheaper. It's very volatile. So EEM primarily has about 40% of its holdings in BRIC countries. EEMV has 25%. We like that weighting. It has avoided some sectors too that we think that, you know, we want to be underweight, almost no exposure to banks. So we like that type of exposure. It's a volatile name potentially, but it's been showing some really strong performance, and we think emerging markets are a place to be.
All right, and then finally you have a First Trust offering. The ticker is FPE. Now, this is the First Trust Preferred Securities and Income ETF. Does pay a lot of income. It's about a 6% yield. You must like that.
We love that yield. So, you know, obviously it's hard to come by. Yield is hard to come by. It's had some, you know, more volatile times here recently with a lot of the issues with Deutsche Bank. There's a lot of financial names in the preferred sector, but it's sort of calmed down. You're going to get paid a beautiful dividend. A lot of the dividend too is taxed at you know, long-term capital gains versus ordinary income. We like that. So we think it's a holding for people who are trying to diversify, find some income, and we think that's going to be a great holding for us longer term.
All right, well, thanks a lot, Brock.
Thanks for having me.
And thank you for watching The Street.